say, I can't do that. I tried that and it wasn't worth $200 or $300 a month. And they're focused on the pain, and they're missing out on the fact that this is a long game, and your gains over time come through being able to raise rents over time with inflation and having that equity appreciation and making your buildings nicer.
Something we haven't ever done on this channel is really focus in on how one rental property changed our financial future. We're going to have this conversation with Anna Kelly. We're going to do it in ping pong format, where she talks about lessons from her first, in this case, multi-unit. And I, of course, will talk about Norris Drive, which I wrote about in our first book, One Rental at a Time. Anna, it is amazing to think about what both of us have built over a couple of decades, but I want to go back and just focus on the first one. What are some lessons, good or bad, that you take from that first one? Because I want most people to understand that one rental property can absolutely change your life. So what say you?
Absolutely. So I'm going to pick my first multi-unit, okay? Because it's the one that really made so many changes in my life. And I think the first thing was, people would be surprised to say, if they haven't heard me say this before, that I took a huge step back. I had a big house in Texas, and I had 2 young kids, and we moved to Pennsylvania to start my husband's practice. And I said, you know what? We really can't afford starting a brand new business with lots and lots of debt to buy another house, or even to rent a house for that matter. And so we had a small rental property in Texas. And so I knew the power of getting a little extra income, but I said, hey, I grew up in apartments. Let's just buy a 4-unit and let's live in one of the units. We can do it for a small amount of time, live below our means, while we built my husband's business. And my job was work from home. So it was a trial. I was AIG's very first ever remote employee in 2007. And they said, I don't know about this remote thing. We'll give you 3 months. So I said, we got to learn to live below our means, because I don't know if I'm going to keep my job. I don't know how your practice is going to do. So having that rental property and house hacking it, living in one unit and letting the other 3 pay our living expenses, was life-changing. And it's one of the most important lessons I learned. And one of the most important lessons that I continue to tell people is learn to live below your means while you're working to expand your means.
Yeah, this story, I mean, you've said so many amazing things. I remember one time, I think it was a couple of years ago, you said that house hack, that first 4-plex, going backwards in people's minds, was your best financial decision ever.
Yes, 100%.
Yeah. It's pretty amazing. The other thing, again, just to simply think about, for most people, X taxes, shelter is your most expensive line item on your monthly budget. And if you can find a way to live somewhere, for significantly less, 0 or even positive, right, be paid to live there, that's just like an amazing wealth building hack. That's just throwing money at the bottom line so that you can get these seeds, AKA discretionary income, and go from there. So
yes,
I love that story. The first one for me, I'll actually, Norris Drive, I'll actually talk about, a hard thing, right? So again, we get this property. We're all excited. For us, it had been a 14 or 15 month journey. We were looking in the wrong market. We finally found a good market. We get the unit. We buy it. We don't know any better. 20% down, standard 80% loan. We get the rent that we want, 1095, and then lo and behold, the tenants move in and they get divorced. Wife takes off, never to be heard from again. The husband quits going to work, clearly becomes an alcoholic and depressed, and we suffer some significant losses. Right, real estate's hard, right? And we didn't do anything wrong, right? We did all the credit checks, reference checks, income, all those things. It's just life happens. And one of the things I learned with Norris Drive is if you keep doing the right things, it'll turn around. So while our first, let's call it 5 months of ownership of Norris Drive was nothing but a headache, we owned it for another almost 3 years, and the property doubled in value. The next tenant moved in, never missed a payment, never had a repair issue. It was kind of the dream tenant after the first nightmare. But it really proved to me that if you buy it right, you have the right debt structure, you can hold, to really do amazing things. Now, for us, that was 3 years. Sometimes it's 10 years. But just the ability to have that unit go through the trials and tribulations, know that it can be hard, there can be pain, but come out the other side and just see, the six figure, almost multi six figure in equity gain, which became an apartment building. It just proves that real estate works over time.
Absolutely. I love that because I can tell you, I hear more people say, I can't do that. I tried that and it wasn't worth $200 or $300 a month. And they're focused on the pain, and they're missing out on the fact that this is a long game, and your gains over time come through being able to raise rents over time with inflation and having that equity appreciation and making your buildings nicer. So it's not just the $200 or $300 a month on the one unit that you're making and the headaches there. You get better as you go. And so I think one of my lessons is that you've got to learn to treat your real estate like a business, not like a hobby. And when we first moved in, to our property, we told the tenants we were the owners, and so that was a mistake. Now we are the managers, right? They don't necessarily own that. We know that we own it. And so, we got friendly with the tenants, and then they knock on your door at all hours of the night if you're house hacking. They want, every time I walked outside with my little 10-month-old and my 3-year-old in the snow in a hurry to get them to grandma's house, we need something. We have this wrong or that wrong, or can you just change our light bulb? And it was like constantly talking to us. And then when they didn't pay rent, they wanted us to be their best friends, and they wanted us understand it. And so we made one of the mistakes that you mentioned, where we weren't great on tenant screening. You were probably better at it in the beginning, but somebody came and they applied and they seemed real nice and they were dressed in a suit and had a nice car. And so you think, oh, they're going to be great. Little do you know, they're professional, deadbeats, and they come and they quit paying rent. And so we learned so many lessons from not knowing how to handle it as a business, just doing it as hey, the money will come, it'll be easy. It was much harder than we thought. So we learned you have to be consistent and treat everyone the same. You have to screen all your tenants the same way. You don't make exceptions if they have bad credit or they don't meet your criteria. You don't make exceptions of how long you let them take before they pay the rent. Everyone's treated the same. They all apply. You file eviction on the same date. You're kind to them, but you're not their friend. You're not their lender. You're not their, family member that they expect you to bend over backwards for them anytime that they have a problem. And so I learned valuable lessons there, that because I lost a lot of money not handling it, treating it really like a business, I got much, much better as I went on, and became much, much more profitable as I went on as well.
Yeah, the next thing I want people to realize is if you own just one rental property, for a couple of decades, just what might happen, right? So in our case, Norris Drive, I talk about Norris Drive having babies. I don't know if that makes sense or not, but basically we owned Norris Drive for a year and a half or so. We did a cash out refi. We took that cash and bought 2 more houses. Right. And then ultimately we 1031 out of Norris Drive and bought an apartment building. Then those other 2 babies, they also were sold and became apartment buildings. Right. So when I kind of tried to track my initial 20 grand, right, which is all we put down, I think it was 21 grand on Norris Drive, that over 2 decades, now probably, 21 or 22 years, is several $100,000 in equity, hundreds of thousands of dollars in cash flow. And frankly, that 20 grand has been returned to me 10 times, right? So I have no money in these deals, no money, because I've done cash out refis and rate and term refis and all of those things. And if you own a cash flowing asset and you have the right debt structure, you don't have any time constraints. You can make moves, right, when it's good for you. Right. If the rates, go crazy, you don't do anything. Rates fall, you have some choices. So the fact that you buy one rental property today and it's $100 a month or $250 or whatever it is, I just want you to zoom out and realize you're going to be alive for a couple of decades, or at least hope you will. The cash flow will go up, the debt will go down. You'll be able to, if you choose to, do some equity extraction or even a 1031. It's just like Monopoly. I mean, it's amazing what you can do with just one rental property. It changed my life.
Absolutely. I'll echo that and add another point there as well. The kind of debt that you put on the property is really important. And so I learned that as much as possible, when you can house hack, which is basically you commit to the lender that you're going to live in it as your primary residence for a year. A year is not that long. If
No.
you can buy a property, house hack it, you can get 30-year fixed in, mortgage payments. And so you don't have to worry about, interest going up and down during your ownership like you do on most properties that you buy commercially where you're not living in it. And so, you can house hack the one, move in a year and do it again and do it again and do it again. And that allows you to live below your means, but you have that 30-year fixed mortgage on it. And, if you're living in it, you get the best interest rates as well versus the interest rates that are generally a little bit higher for an investor. And so the power of having that locked in payment when rents do go up and when values do increase is extremely powerful. And for me, I sold that fourplex about a decade later, a little more than that, for more than 150% of what I paid for it. So I paid around 220. I sold it for about 450. But along the way, Michael, I did exactly what you did. We learned to improve those units. We improved all 4 units. And when we improved the units, we went and we got a second mortgage on it. The other thing that we did a couple of times is we said, hey, we paid off that second mortgage. Now we want you to give us 100% financing on our next property with the first mortgage on it, and you can put a second lien on our existing property. And so we tapped the equity just like you over and over and over again. Ours had those babies as well. But doing that while locking in really low rate debt is the powerful way to do that. Because if you're locking in for 5 years, as we've seen over the last couple of years, your payments could go up significantly. But generally when that happens, your equity's gone up quite a bit as well. So even though interest rates have gone up, values and asset prices have gone up as well. So it's really powerful tool. And we couldn't have done it if we hadn't done the Burr method, like you just said, with really great interest rate debt.
Yeah, the last thing that Norris Drive really showed us, that first little house, was that there is a different way to build wealth, right? I was raised in a family where wealth was never talked about. And frankly, investing was never talked about. I went ahead and got a econ degree, went back to school, got an MBA. I thought the answer was the stock market, and, just not my thing. Real estate, if you focus, and again, I had that Mayfair buy box for 3 years, and I knew it better than anybody else on the planet. You can really find great deals, right? If you spend the time to learn average, then the world's your oyster, because you won't. I don't think anybody should do an average deal. It's, how do we create good or great deals? So, Norris Drive was really a proof point, because again, it took us about 15 months after wasting a year in the wrong market to really prove the model worked. Even though we had that bad experience with that first tenant, when you zoom out, it's like, yeah, this thing works. And if you do it right and you improve it, you're not a slumlord, and you take the opportunity to move equity when it's available to you. One rental property could make you a millionaire over the course of time, let alone 2 or 3. So I just love the fact that it proved the model worked.
Absolutely. And I had, an aha moment of that as well, even though I had, I'd flipped some properties. I had a small cottage rental in Texas before I bought the multi-unit. But one of the things that living in that 4-unit taught me was, we bought that property in early 2008 before the Great Recession hit. We had started a business with a lot of debt in 2007. And what I realized is, although we didn't have a lot of money to put down on a property, if I had tried to be investing just in the stock market, I wouldn't have had anything to put in it. So it would have, investing in the stock market takes money, and you can leverage in the stock market, but it's very difficult to do that unless you've already got a pretty decent high net worth where they know you can afford a stock market, dip or decline. But what it did is it showed me, in times of great financial uprising or chaos, like in the GFC, 2008, 2009, a lot of companies are hit hard. Your job is not guaranteed. If you have a small business and it relies on people having discretionary income and they're living check to check, your small business is going to struggle. But real estate is one of those investments that's based on fundamentals. It's something people actually need. It's not discretionary. And during the GFC, when economic times were really hard, my job was at risk. I mean, I worked for AIG. I was told every week, y'all need to be looking for jobs because we're going to have to sell a lot of divisions, right? My husband's company was not doing well. And the only thing that was consistent, Michael, is my tenants paid rent. They prioritized living in good, safe, clean housing in a good area with good schools and good jobs. And so I realized, wow, this is an investment that's really based on fundamentals. And it's something that people are always going to need. And so if you have the right tenant screening, you're always going to have good people that want to rent your property. And that fundamental was the only safety net we had when I was losing, 2/3, 3/4 of my 401k when everything fell out from underneath me. It was like, wow, this is a really strong investment. And then the second thing off of that is I didn't need a whole lot of money to get started, especially if you're house hacking and living in it, because you can get in certain areas of the country, USDA mortgages, 100% financing and your closing costs if you're living in it, right? And then even if you don't have rural area, 3.5% down with FHA. It's one of those investments that has such strong fundamentals, and you can also get amazing financing to get started with very little money out of your own pocket. You can't do that in many other investments. And so that first property really taught me the aha of this is a fundamentally strong investment that doesn't depend on the market being good, the market being bad necessarily. I'm 95% occupied, even in the Great Recession. It taught me the power of buying things that have intrinsic value that people need. And that if I could continue to get low down payment loans, lock them in for 30 years, it was just going to continue to snowball. And our wealth grew substantially more than what it would have if we had tried to start with nothing in the stock market.
Again, folks, we both believe, both Anna and I believe, that one rental property can change your life. Obviously, if you stay in the game long enough and you get to 4, it's even better, and 10. Folks, that is amazing stuff. Anna, where can people find you?
Great. You can find me on your show each week. You can find me on social media at Anna Kelly, REI Mom. And for real estate and wealth consulting, you can find me on my website at annakellyyinvesting.com.
Thank you so much.